Afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session. And just after we saw the NASDAQ and S&P hit some resistance at the 21-day line, we did come off a bit today, and small caps and mid caps taking the hardest hit today, Ken.
Yeah, but overall, I would say a pretty orderly decline considering we had a big spike in bond yield. So we'll go over that in a second. But I have three stocks to talk about. Two in the energy sector because oil prices were up more than 3% today to 85 a barrel. But we'll take a look at APA, a company with major operations in the Permian Basin of West Texas. APA is a symbol there. Northern Oil and Gas, NOG, and finally we have to talk about Netflix's big move today on a pretty good Q3 earnings report.
Yes, we will get to all that, but first let's analyze the major indexes. The NASDAQ today down about 0.9%. We had the S&P 500 down 0.7%. The Dow down just 0.3% today. The Russell 2000 down 1.8%. And MDY, something we've been taking a look at more lately, Ken. The index tracking ETF for mid caps down about 1.7% today. But like you said, all in all, not too much damage. We did get some resistance for the NASDAQ at the 21-day line. So haven't been able to get above that level yet. But this rally attempt is still intact.
Absolutely still intact. We had that great upside reversal last week on Thursday, the first day of the rally attempt. So here we are at day 5. We still have not seen higher volume declines. That's a good sign as we proceed in this rally attempt. We've been moving up with some volume, and declines have been in light volume. So we're still keeping an eye out for a sign of strength here to show us maybe that the market tide has started to turn positive. Haven't seen it yet, but optimistic that because we're in a seasonally a pretty good period for the market, that we could see a little tradable rally between now and the end of the year. But we'll have to wait and see how it all plays out.
That we will. And I know, Ken, you said today's pullback was orderly. Let's take a look at the intraday chart here. We are still seeing a lot of gaps in either directions, gap ups, gap downs, reversals, resistance. So what do you make of all of this volatility that we've been seeing? Is it finally going to calm down?
Well, let's hope so. I think we could all use a break from the volatility that we've been seeing. But yeah, I mean, the selling really never picked up the pace. So anytime we started heading lower, it always seemed to be contained. So all in all, and we did get lower volume. So volume in the market today was lower than what we saw on Tuesday. So maybe orderly. I mean, it was a decline, but the market seemed to hold itself pretty well, pretty together, considering again this big spike in interest rates that we saw.
Great point there. So, like you said, day 5 of a rally attempt. We're on follow-through day watch. We're looking for a relatively substantial gain in that volume, heavier than the prior session. Anything else we should know about the broad market at this point as we head into Thursday? I mean, I know we're in the thick of earnings season. We've been talking about it. We'll talk about Netflix in a bit. Tesla out after the close. At the end of the show, we'll get your early reaction, see if the stock is moving at all. But what about some of these key reports as they continue to pick up that could seemingly have an impact on the market's direction?
Yeah, I mean the Q3 earnings season is still a wild card. Obviously, we're still in the early innings here. Financial stocks started us off, and overall the results were pretty good there. They were all saying singing a similar tune, increasing their provisions for loan losses in anticipation of maybe some softness in the economy going forward. And then their net interest income has been up quite a bit because interest rates have been higher. So that's helped the banks. And the numbers from Netflix were good. We've got next week is going to be very, very busy because we've got Meta and Amazon and Apple. So it'll be pretty telling, I think, by the end of next week, because that's when we're going to get the bulk of the Q3 earnings reports. But in terms of market leadership, I mean, it would be nice to see leadership start to broaden out a little bit from oil and gas. That really seems to be the only area of the market that's working right now. But seeing some opportunities in the energy sector outside of that, it's kind of slim pickings.
Okay, thanks, Ken. Let's also briefly look at some of the other major indexes. So the S&P 500 back below its 21-day line today. The Dow is holding its 21-day line. Let's also take a look at the Russell 2000. The IWM ETF got above the 21-day yesterday, back below it today. Like I said, small caps and mid caps taking the hardest hits today. MBY, though, coming off of its intraday lows. It would be good to see everyone, moving in the same direction. Looks like even though mid caps took a harder hit today, still right around that 21-day.
Yeah, it's still showing that the fifth day of a rally attempt is still very much intact here. And I didn't want to give short shrift to a couple of Dow stocks today that were a big reason why the Dow was able to hold up pretty well. But we saw a nice earnings report from Procter and Gamble, and also Travelers, insurance company Travelers, that kind of helped cushion the Dow. And we have IBM after the close. We'll see what that one's doing later.
Great. And you mentioned the 10-year Treasury yield, so let's go there. Look at that, up over 3% here today. So a clear 14-year high, right, Ken? I mean, and we're on a weekly chart here. That's yet another, at least so far.
Well, you can go just hit the monthly, and you can just see the monthly. You have to see the monthly to see how far back, but it looks like the first half, maybe June of 2008. You'd have to go back to see the 10-year Treasury yield this high. So it's a multi-year high.
That it is. All right, continuing its strong advance, and oil and gas stocks leading. Let's take a look at XLE here, up 3% for the day, so underscoring that sector strength. Meanwhile, USO, which is a rough proxy for the underlying commodity here, oil, up 2% today. But this chart here, definitely not as strong as some of those stocks in the group, which have really held up despite oil coming off, still in its downtrend, even though off of lows.
Yeah, USO not looking so hot technically here, but that XLE, which is the ETF, the Energy Select Sector Spider, that's actually looking, pretty decent here, holding above its 50-day moving average after it moved above that level with some volume. So you see, this chart actually looks like a lot of charts that we're seeing among all kinds of oil and gas stocks. So XLE looks pretty good, but the price of oil, it was up big today, even though President Biden authorized the release of another 15 million barrels of oil from the Strategic Petroleum Reserve, and that move comes after OPEC Plus cut output by 2 million barrels a day. So the Biden administration trying to get control of oil prices here, but I'm not sure that releasing 15 million barrels is going to do it, but we'll see.
Well, a good update there on what we're seeing in that sector, and we'll get to a couple of individual stocks here soon. But first, let's check in on Netflix, because definitely in the headlines today. Earnings out late Tuesday, and the stock popping 13% by the end of the day. Strongest volume since the last quarterly earnings report. But even though, if you just look at the numbers here, Ken, earnings down 3%, revenue just up 6%. It was an estimate beating report. Strong numbers for Netflix, so the street really liking it. But what's your take on what we're seeing from a fundamental and technical perspective here?
Well, I think the bottom line with Netflix is that its best days of growth are behind it, and that can happen with a company. Netflix was a huge stock market winner back in 2018, 2019. You can see the huge run that it went on. So now it seems to me like it's just going to be kind of a market performing stock. So and that's fine. Some people may like that, but clearly, with the investors sending shares up by 13%, with revenue up 6% and earnings down 3%. The estimates are not that great. They do have this new ad-supported subscription tier that they're going to be launching November 3rd. That's probably going to be a while before it finds its way to the bottom line. But the story with Netflix was the subscriber growth for the current quarter was well ahead of expectations, and their guidance for Q4 subscriber growth was also very strong. But we know that all the original content that Netflix puts together costs a lot of money, so they're still going to be spending money to make money. But Netflix is just not going to be the growth stock that it
Hmm.
once was. Good technical move today, as we talked on IBD Live this morning. Would like to see this kind of find a new home above the
Right.
40-week moving average here, and if it can do that and move sideways, and for people that really want to own the stock, I would wait for it to just kind of consolidate here a little bit, and
Right.
then you can find a good entry.
Right. Yeah. One would expect this momentum to continue to the upside, but that doesn't mean it can't hit resistance at this 40-week line, that black line on the chart, or the 200-day line on the daily chart. So that'll be a key hurdle. Can it get above and stay above that level, as you said, Ken? But for now, it's extended, right? We don't want to be chasing extended stocks, even if this
Yeah,
was on some investors buy lists or watch lists. You got to be patient and now wait for the right time to present itself.
Yeah, I mean, the one thing Netflix has done is it's made a pretty good case that it's hit a bottom here. But after the breakout today, the gap up, definitely want to wait for it to consolidate a little bit. And if it's just a stock you feel you really have to own, see if it can hold above this key support level. And if it does and trades sideways, that might give a way into the stock.
Hmm. Thank you, Ken. Okay, let's take a look at APA here in the International Explorers and Producers Group, ranked number 9 out of the 197 groups that we track. Moving above a trend line in a handle today with a gain of over 5%. Volume was below average, but a pretty compelling setup here, Ken. This chart does look like a lot of other names in the group, but tell us a little bit more about why APA should be on our radars.
Well, I like the accumulation distribution rating of A minus. That kind of sticks out to me because that makes the stock kind of unique in this area. You're not seeing too many stocks with accumulation distribution ratings this high, but all you have to do is just look at that rally when the stock came down close to 30 and then powered higher through the 50-day, right in that area. Yep, and you can see the volume that came behind there. So there were some good signs of institutional buying there, and then it crossed the 40 level, and now it's pulled back. And notice how it's done it in very light volume. So the price and volume interplay here is just what you want to see. It raises the likelihood for maybe a breakout. Over this pivot here, and we'll see what happens. But I like the setup here, and it's not hard to find strong fundamentals in the oil and gas sector, and APA is just one of several stocks that's showing that good bottom line and top line growth and pretty good estimates too.
That it is. Let's round things out with a look at NOG, Northern Oil and Gas. This is in the U.S. Explorers and Producers Group, 7 out of the 197 groups that we track. Compelling move here above the 34.35 level with a gain of over 5%. This one did have that above average volume behind today's move.
Yeah, another. This is a small cap stock, very liquid. It does trade more than 1 million shares a day, but the market cap right around 2.5 billion, 2.5 billion thereabouts. Really nice estimates. I mean, the structure itself isn't great. I mean, it's a little bit wide and loose, but to me, if we go back to the daily chart, the pattern recognition on MarketSmith is still, recognizing this 33.50 buy point, but you can see a breakout over that level failed miserably. The stock went all the way down to 24. It's rallied back up. So I would actually call this 34.59 pivot actionable. And with the stock at 35.21, it just doesn't really feel like you're chasing it up here. It's made a nice move over the past week, but Northern Oil and Gas is a little known name in the exploration and production group, and still looks like it's in a buy zone to me.
All right. Thank you, Ken. And now let's get some quick takes on some of the earnings movers after the close. Here's a look at Tesla. Revenue miss here for the electric car maker, down about 3.8 to 4%. That's the early reaction here for Tesla. Ken, what's your early reaction?
Well, I haven't had a chance to look at the report yet, but Ed Carson tells us that it was a revenue miss. Their conference call is going to be later today in California. So go to Tesla.com to the investor relations area, and you can have a listen and see what's going on. But the stock is looks like it's down 3-4% in after hours trading. It's been under a lot of selling pressure, you can tell. So maybe the market was sort of pricing in maybe some Q3 softness. Tesla continues to produce a lot of cars, but there are signs that demand is waning a little bit, and of course increased competition. So lots of challenges ahead for Tesla, but Elon Musk is a tough CEO to bet against for sure.
And what does this mean for the market, Ken? Because this is a mega cap stock here.
Well, it's a big member of the Nasdaq 100, so maybe we see how the Qs are trading right now, and so just only down about 1/10 of 1%. So we'll see. It looks like a fairly orderly decline so far, but a lot can change between now and the open tomorrow. So we'll see how Tesla opens. But it is a big stock and definitely a potential market mover.
Yeah, you're so right. Anything can happen. After hours action doesn't always translate to the following day, so we'll have to see where it heads tomorrow. Let's also just quickly take a look at Alcoa AA, down almost 10% here on its report. Ken.
Yeah, this is another stock that's been on a downtrend for quite some time. Sort of the risks of buying stocks that look like they're on sale. Maybe a deteriorating fundamental picture. I mean, this chart has shown it with the stock in a tremendous downtrend, and you can see the growth has been pretty good, and I wouldn't be surprised to see more good top line and bottom line growth, but not a good market reaction so far.
And quickly, let's just take a look at LRCX. Chip equipment maker up a little bit, about 1.2%. And then we have IBM up 3.3%. So there's your quick look at some of the earnings out tonight, and even more coming up next week. I'm sure, Tuesday, Wednesday, Thursday, which Ken, you and I usually do this video on Wednesdays and Thursdays. And next week we'll have even more to break down, to get Ken's quick takes on some of the earnings reports.
Sounds good.
All right. Well, thank you all so much for tuning in. We will be back with more tomorrow morning on IBD Live, so make sure you join us. We are in a rally attempt. What will tomorrow bring? We've got you covered with all the analysis up to date, up to the minute, of what you need to know to make the best investing decisions possible. So we'll see you there in the morninginvestors.com/IBD Live for all the details on that. And we will see you back here after the close as well. Thanks for watching.